Happy Friday. Good morning, guys. Good morning. Oh, looks like people are a little late getting up today. A little bit slow, maybe they're a little bruised, sore from the day before. You know what I like to do? I learned this many years ago from playing sports. After a game, after a Friday night game, so I played football growing up. After a Friday night game, and you play until, you're up till like 11 p.m. that night, right? 12 o'clock. We would have to wake up at 6 in the morning to have practice and watch film. And we'd all be sitting there in the room, bruised, ice on us, sore, but it was the best time and those focused we were. So those of you that are feeling a little bruised, maybe look for some, good there. And there's certainly going to be a lot of opportunities today. So if you're not prepared, yikes, it scares me. Uh, I spent a lot of time looking at everything yesterday, looking at other people's data, trying to understand what exactly what exactly is sort of the mindset of everyone else. I think we can really sum it up in the volatility chart. We're going to look at that in a second. Just give people a couple of seconds here. In terms of pre-market, we're fluctuating. S&P, Nasdaq are up. Nasdaq being up, again, tech does well under volatility, so we're seeing that. Dow and the Russell are about break even, making sense. I don't know what this junk is here. Dumb ideas on TradingView, but again, futures just again break even. In terms of Asia got absolutely shit on, lost about 4%. Why? Because they do not do well on rising bond yields, treasury yields, because they are one of, and I've always talked about this, they're actually one of the largest in terms of borrowers in the dollar and converting currency that really fucks up their swaps. It's to be expected a bit over there. And also, what did what did we said about Asia? It's just tech. It's just tech. Look at the difference between Asia and Europe right now. It's almost the exact same as how much growth lost yesterday compared to value, because Europe is value oriented, Asia is tech oriented, and we're seeing it still. Now, what's going on with yields? Hopefully, some of you have now Googled the word bonds. What is a bond? And figured out something. Yields are pulling back. Everyone is digesting, feeling a little bit better after what you can really call just overreaction, right? And I've talked about this event happening before. Many of you have heard me say this multiple times at random different times, it seems, where I talk about this event, this liquidity event happening in bonds, where everyone starts to try to sell, and it causes the significant selling event because of a liquidity problem. That's what we got yesterday. And I'm going to show you the volatility chart, and I'll show you the dollar and everything included. Let me just start with the dollar. The volatility is a bigger idea. Here's the dollar. How much has gone into the dollar compared to the outflow in treasuries? Not an equal amount, that's for sure. We had more money coming over here when money wasn't coming out of treasuries than we do over here. So the dollar's still technically trending down here. Haven't even broken through the level. Where's the money, guys? Where's the money? Where's the money that came from the equity market? Under their mattress still? They put it under the mattress. Here's the VIX, spot VIX. Yesterday, did you feel like the pullback from yesterday and the day before was larger than the pullback over here at the end of January? Remember when the spot VIX jumped 62%? Took advantage of it. It was a little bit easier for us to see, and we had to maneuver around it. This is a little different over here because it's yields oriented. Here's the spot VIX in terms of volatility at that moment, and here's the volatility over here. Does it make sense? What about in the way you feel, right? I just want you to think about the way you feel. What if we just take a look at the Nasdaq here? Okay, here's this, and where's the 23rd? It's over here. Oh, this is the end of January over here. What do you think? What do you think in terms of volatility, right? Put some numbers together for yourself and just the way you feel. and think about volatility in the way that we're understanding it, and then understand, do institutions, and when we talk about the big boys, do they make large portfolio decisions just at random without knowing what they're doing? Do they sell treasuries because of an idea of inflation without a longer term view than just one day? Some of you trade on just every single day. You can't look past the day in front of you. You can't look past the candle that's in front of your eyes. It's almost impossible for you to look forward. Do you think trillions of dollars out there are just looking at the day, or do you think they're actually projecting a little bit further, right? And that's where you got to start to. This is where the macro sense helps you, because you understand that, okay, if I'm I'm looking at a lot of different foreign indexes. I'm looking at the dollar, seeing the way that currencies are shifting, looking at the volatility, looking at the way the sectors are getting different flows. Where's the money going? When you're asking these questions, it's because you're trying to get an understanding that's more than just right now. You're trying to get an understanding of where people are projecting price to be in the future. And that will allow you to trade better, so that when you look at a chart, you're looking at it through the lens of trading and not through, oh, wow, look at what's in front of me here. And a lot of times it's very easy to get caught with trying to, whoa, look at us go, and then, whoa, look at us die. And again, that I post on Twitter this idea of just pumping one day, and crashing the other day. They do it every day, right? It's because you can't look past it. As a sophisticated trader or investor, professional, you're not looking at it like that. All of you do this every day, so technically you're professionals at this point. So let's just be honest. um, let's again, let's pick it up. Let's pick it up a little bit in terms of looking forward. I think a lot of you still get caught in this day. I posted some interesting data in the Unrefusable channel. I would take a look at that real quick if you haven't looked at it. In terms of what's on there, there's the flows. There was about 414 billion flows in the last 16 weeks. That includes what just happened today or yesterday and the week before. I post a history of yields chart. That's going to be very interesting for some of you that just want to see what exactly happens after such a large rally in yields. It seems like it's more towards the downside, which makes sense, because if price is going up, it's more likely to have volatility to the downside. Again, that tail risk idea. And then the last chart is an outperformance of value over growth. This one, I was not hoping, but I was expecting a little bit more of confirmation of an idea of value over the performance of value over growth. But this one doesn't really, besides the average in there, it doesn't really give much confidence to the idea, other than just, okay, maybe on the average, value outperforms growth, right? But not really so much. And what does that mean? When I look at that data, you see those plots all around the line there. It really means that the ones that are going to do well in this market are not the ones that are trying to track indexes in the average. Who's going to do well? Those that are active picking. They're picking stocks actively. They're picking out those trades that are going to make a dime when the others are on an average losing, or just not doing much of anything. And we talk about this every day, that we don't trade the average. We use the average as an understanding of supply and demand in the market, but we don't trade the average. There's times when we do. But 95% of the time we're not. We're trading individual tickers, trading the derivatives of them based on speculation, and that's it. That's what we do. Who's going to do well right now, and who did well over during the very difficult time over here with volatility of last year from COVID? Those who actively pick tickers. Now, could you have just put money into the market and made money? Absolutely. Could you have put money over here and made money? Yeah, you just need to be patient. But it's very hard for traders to be patient, right? You bought over here and then you sold yesterday anyway, right? If you just waited a month, you would have been fine. But it's very hard for us to do that, because that's not what kind of traders we are. We're trying to trade and get that, we're trying to be a little bit more short-term swinging, right? We're not trying to just go put an investment on. If you want to do that, then there's an understanding, of course, that you're not going to be making as much money in the short term. And for a lot of us, that's just not fun. I don't want to do that. I don't want to just put my money into a Vanguard account, say, good luck, guys. Make me money over the next few years. Thank you. Not if I have an opportunity in the market to make those gains now, and you do. You do, but you can't force them. So those of you that are revenge traded through this, you're going to revenge trade today. You're not going to make the cut. You're going to, what is that Survivor show where, what is that saying when they vote them off? The tribe has spoken. Well, the tribe's going to speak if we see any passive aggressiveness in the chat today. Saw it yesterday. You guys gotta remember, it's part of a process. This volatility over here is a wet dream. For some of you, you're salivating when you're looking at some of the things in there. What's good for us? If the spread is fucking wide, that's great for us. If there's a wide spread and there's a lot of uncertainty, that's great for us. You know what was great back here is that not only were the spreads wide and no one knew what the hell was going on. I didn't know what was going on. Nobody knew what was going on. But you don't need to know what's happening all the time when there's so many people that, first of all, there was a whole bunch of new traders, right? Whole bunch of new traders, but it was the volatility was so high that all you had to do was swing in between those moves. It's very hard for price to stop once it gets going, and then when it gets rejected, it's very easy for it to continue, right? So all we did was swing back and forth for fucking months and trade to the long side on areas in which we knew, which first was tech, because tech does well under volatility, and then when we turned through this consolidation, understanding when these pullbacks, look at these pullbacks considering these pullbacks to where we are now, and understand where we bought during these pullbacks and how we took advantage and had confidence during those moments. There's a lot of different times in here, and you need to remember some of these, because I think for some of you, you made great trades, and then maybe now it's hard for you. Maybe if you have more money, maybe just under different circumstances, it's hard for you to do something that you've done before, or you saw an opportunity before and you wish you took it, and now it's hard for you to actually pull the trigger and do it. A lot of people are going to look in hindsight at the way they react to the market. Do you guys even remember this week over here? Do you even remember it? I would bet that there's only a few people here that actually even remember the way they reacted over here. You don't even remember. You don't even remember this week, right? Brian says he remembers, but there's probably most of you don't remember. You just don't even remember what you were thinking and the way you reacted and what you did here, right? And so there you go. Brian says the first time I got in at the bottom, so he remembers. Yeah, you remember if you did something, right? Over here, the same thing's going to happen again. It's just you can't. There's nothing you can do, right? There is nothing you can do about that mindset other than just to keep going with it. Just keep making trades. What I say over here, just buy a put. Just buy a put. Just make a trade. And so there's a lot of times again where, listen, you could just go to bed for fucking 2 weeks, come back in 2 weeks and start trading again. Whatever it is, it doesn't matter if you missed this. It doesn't matter if you missed this dip. It doesn't matter if you missed this dip. It doesn't matter if you missed this one. Whoops. It doesn't matter, right? So it's fine, but just realize if you're here and you're doing this, then just take something from it. You should be able to take something away from it so that you can look at these and say, okay, what is it? Is it clear to me? If it's not clear to you, don't trade. Those of you that, listen, you guys have to work just due to experience. Put it in this perspective, okay? For those of you that are sad or upset, pissed off that you lost money, or you're happy when you make money, think about it in the sense that, are you more experienced than the average amount of money in the market? Put it in perspective of, okay, how much experience do you really have? And then how much time are you putting into it? Due to me having more experience than you, just that virtue alone, you would need to work harder than I do. You would need to put more time in than I do because I have more experience than you, right? So due to that, if we are on a trade together, right, maybe you're taking a trade and I'm taking a trade for a similar idea, who is going to have a better trade there if you're not working harder than I am? And again, yes, you have to work and you have your own things to do. So that means you need to make trades that don't require you to have to do more work than someone like myself does. I work 15 hours a day doing it. Maybe you work 15 hours a day at a dentist's office as a lawyer, whatever you fucking do. But you cannot then go get upset and say, I did everything I could and I lost money here. No, you didn't put in the amount of work it requires, just like for your own jobs, it requires a certain amount of work and commitment. I don't come into your doctor's office and say, listen, I watched some YouTube videos, I can do the surgery, and then as soon as I fuck up the surgery, go, you know what, I tried. It's upsetting to me, but, based on the things I did, I thought I could do it. I'm not going to be a fucking lawyer and say, you know what, I read some books, and, I thought just by doing it, I could learn it, and, it's unfortunate, and now I'm sad. No, I understand it takes some fucking time. And there's people that are going to be better than me. There's a lot of people better than you, and there's a lot of people better than me, so we have to operate in the area in which we can. Those of you that don't spend the time to look at charts, you can't then just go and trade anything you fucking want. You can't. It's not going to happen. How many times have you traded something that all of us are trading and you lost money on it? Look at our group's fund. You guys traded the things that are all going up every day and have been going up, and you lost money because it's exactly the point of a little bit of timing error and just a little bit of uncertainty, and because you haven't put in enough work. And if you're not going to be able to put in enough work, you need to put that into your understanding, right? What do? I completely remove the fundamental side because guess what? People know a lot more than I do about the financials, the businesses, everything else. None of you here can run one of those fucking businesses. So why do you act like you know better? You don't. So you don't get to trade that way. You don't get to do those things. We get to operate in a very small space in terms of what we can do. And a lot of that comes down to the sizing, being a smaller size, and the ability to get in and out of trades at a quicker pace, which allows us to take advantage of short-term timings that it takes one trade. It takes one trade to make 100%. For an institution, it's going to take millions of trades over a year. And guess what? It's not going to be 100%. It's going to be 20%, 30% at fucking most, right? And so we get to operate in this small space. You don't need to make a trade every single day. Some of you think you need to trade every single day. I always say it. For most tickers, there's maybe 30. I change it up all the time, but between 20 and 30 times a year that there's actually an opportunity on a ticker. At any point, there's like 20 to 30 times a year. So overall, there's about 20 to 30 trades that are going to mean something. All we're trying to do is find out when and where. How. There's moments where we can take those trades that were clear. You don't need to force something through every day and then be like, well, because you don't fucking know. You don't know. You have no clue half the time. You got to use that not knowing and understand that the market doesn't know either. What's going on over here? I know people don't understand what they're doing. I know institutions don't know what they're doing. I know that algos went insane yesterday and were selling bonds because they don't know. They just don't know. They don't have control over the situation. What do I do in that situation? I wait for my moment to pull the trigger on it because I know they don't understand in that moment, but I know they're going to figure it out. So what do? We don't trade on this candle here. We trade on what are they going to do with the next few candles. What are they going to do next week in reaction to this? We know what they're going to do. We know what the market does in reaction to different things because we have so much goddamn data of what happens when certain things occur, right? We can watch macros. We can look at it in a historical context of, looking at data for whether or not money comes out of yields and goes into, what does it go into? Is it going to go into tech or value? These positions were built for certain reasons. So if they're selling them, that's because they want to make a different trade now, right? So a lot of these things again they're very straightforward, but they're not being shown in the moment. It doesn't show itself in the moment. The price doesn't have the accurate price right this moment, but in a week from now, people are going to react accordingly and digest it, right? Is everyone just going to keep freaking out every single day? No, you get comfortable and then you go ahead and react properly. The market in the moment can't react properly because it's all at once. If everything happens at once, then the price is going to show it accordingly. You gotta give it a little bit of time, right? And understand that, okay, the market is actually in a momentary sort of chaos, and understand that it's not always going to be like that, because it never is. There's times of momentary chaos. The rotation day over here, was this was this was this a moment, again, the infamous November 9th rotation day, if everyone rotated out of tech into value? It was the first time. Was this chaos? Like, in the same sense that we're talking now, was it that no one knew what was going on, or did everyone know what was doing? Everyone knew what was going on, and were trying to get a part of it, right? This whole thing here, you don't just randomly one morning say, "Oh fuck, we're rotating into tech. What is our portfolio doing? Why is our portfolio rotating from tech into value? Why is the market doing that?" No, that everyone had the same fucking plan. It's just the fucking violence that happened with it, that it all happened at once, caused this big rotation. Everyone wanted to do it, but no one expected to do it in one goddamn day. That's what the market is right now. It's a level of volatility that's not shown on the spot banks. And it's a level of volatility that causes instantaneous price movement. And I've talked about it every day for months now. The market will price instantly, because guess what? We can, in terms of the way our markets function, they can, in terms of tech that we have now, handle it. They can handle trillions of dollars flowing back and forth. The currency market it's insane. If you guys don't know how much money gets traded on the currency market every day, go look up the number. Go look up the number. Would you be surprised if you hear that trillions of dollars get traded back and forth every single day? Yeah, a shitload of money. A shitload of money, right? So it's again, if you don't know, then just chill. Just chill. Sit back, learn something. You got a long way to go. What do we got in the pre-market? Etsy, big boy numbers, 12%. Beyond Meat, interesting, because there's a lot of levels over here. This is turning into something interesting. Twitter continues, again, this move from yesterday. Talked about that a little bit and the way to manage that. What are we looking for? We're not looking for clarity for ourselves. If you don't understand the picture that I've been painting of all the money coming out of treasuries to go into value, then you don't need to understand it. So you need to also look for what, or maybe you are looking for what I'm looking for. I'm looking for the rest of the market to understand and have clarity. I have clarity over the situation because we've been talking about it and we got confirmation. Yes, it doesn't happen immediately. When you hit a fucking baseball, it doesn't immediately go out of the fucking park. It's got to get there first. And it's the same concept. The price needs to, as it rotates, volatility spikes as it rotates, and as it rotates, then it finally is going to get to where it wants to go, right? There's an understanding of what's going on with that. You got to, again, if you don't understand it, then don't trade it. If you don't understand it, then don't trade it. It's going to take a moment. You don't ever know the timing specifically, so you might have to get into trades, get out of trades, you get stopped out, right? And we need to see it. You need to see it and react to price. So even though I have a story, I'm not going to do anything unless I have it, right? Unless I've got that reaction. What's going on with the vote thing? Do I need to get us in a trade? You guys better fucking hurry up, because I got shit to do. It's tied right now. I'm not doing anything unless that thing turns one way or the other. I don't know what I'm sharing right now on my screen. Okay, it's fine. One sec, we got 3 minutes. And again, hey guys, listen. You don't need to force anything, right? You don't need to force anything. You had a rough couple days. You got to move on to the next one, right? But that doesn't mean just go fucking make a new trade every day. You don't need to every day. For most of you, it doesn't work like that, right? If you're on a smaller account, it doesn't work like that. It's a lot easier to get fucked with a smaller account because of variance, right? With a larger account, the variance only affects you to the actual variance percentage. Those of you with smaller accounts, it's very easy for variance to hit you one time and then it feels like you've really fucked up, even if you made a good trade, right? That's the hardest part Oh, and I see I'm losing connection here. See, I'm losing connection here. Okay. All right, I'm going to make the trade right at open, so good luck, boys. Whatever the majority is, I got both of them loaded. Good luck. You guys got a fucking price in there? You guys want me to market order it? Just do the best we can. I'll just put a limit order in there from the previous. What's the math on this? How many can you guys get? I can't even fucking see. How many you got? We got 2265. How many can you guys afford? How much is it? I don't even know if you can afford two. Okay, you'll be able to afford two if it stays down here. All right, good luck. Quantity 2. What do we want? I'll try to get you guys good there. Good luck. I'll give it a 1069, okay? All right, boys, here we go. Here we go. Let's see what the market's got in store for us again. You know. You know. In terms of IWM here, here's your price. Right on support in there, you know. A lot of things could be going on. Let me just adjust this. See what everyone's got in store. How do I get it so it doesn't bug out on my screen, huh? There we go. Watching and watching and watching. Just looking through books right now. Decent start. Decent start. Come. Again, value, guys. Value, value, value. If you don't know what value is, how can you value anything? Penn, DraftKings, getting that retail treatment. Getting the retail treatment. Nvidia, fucking dojied out of its mind at the historical break-even point. Z, trendline bounce. Upwork, on the trendline out of its mind. PayPal, in the middle of nowhere, but bullish candle. Nova, on the run. Etsy, continuing. Big boy moves over there. OSTK, possible 774.5 break. SeaWorld, taking profit. 4 on the trend line. Tech probably continues. Deathboat, beautiful candle there for a pullback. I like where that opened. Twitter, inside. Oh, baby. Ford, continuing the trend to the upside. Higher low. KC, possible big move again. Meme economy, possible slowing down. CWH on that trend line is interesting. I wonder if we're going to get any semi movement due to the supply chain issues. That hasn't really shown itself yet. Hasn't really shown itself, which is interesting. Volatility. We'll see the interaction over here on the trend line. Now, volatility doesn't really have levels in the same way. The VXX charts, though, the derivatives that are betting, they do interact with trends pretty consistently. So we'll see how that comes. If this comes down in here today, again, it's very hard to tell because there's so much lag on the volatility, and there's so much betting to short volatility. It's just causing volatility. Again, you look at the spot VIX, it's fucking low as shit for no reason. So based on your understanding, obviously it's not exactly correct. So I mean, it could have overnight just completely spiked like threefold, right? These kind of things are the problem a lot of times. We'll see. Apps, that's a really nice candle on apps there. I mean, these kind of trade for, sometimes, again, we're trading for longer terms, but again, if there's short-term trades in front of us, I talk about this a lot for Fridays. We take a trade from open, and we take profit before the close, and that will cover the risk of any losses that we would have over the weekend for entering trades, right? So that profit you make today can cover all of your premiums for the weekend. That kind of thing is a good practice to get into for those of you that, you're trying to make moves, and there's some variance in there of, okay, well, this might open a little lower on Monday, and so here's my cover. The orders are still sitting there. Do you want me to get you guys filled immediately? It's just sitting there. It's just sitting there. Hasn't got filled yet. Completely up to you guys. Trying to get you filled. I'm not going to pay attention to it too much, though. Let's see. Do you want to be watching the Dow a little bit more and talk about the Dow a little bit more for like larger value? So we're going to be using the Dow chart a little bit more because it's been so shit to look at, but I think it's important now that it's got some volatility over here to be using it a little bit more. So maybe not specifically today, but we'll look at it before lunch and then at close as well. Start to try to break it down a little bit. Important to get some of those big, larger value companies as part of our numbers. Run with some moves coming into the resistance rejection. Let me remove this stupid shit. Done. I think I need to get you guys filled right now. I see price soon. Let me get you in. Let me get you in. Okay, 11:20. Get you 11:20. Which is right when it started to move, so could have got you on like an open, but that's the best we could do right there. Not to say I didn't do better. Nah, you guys come last. Not bad, guys, not bad. We'll see how you guys do. Interested to see how you do on the brink here. The brink of destruction. You guys have had good trades before, just poor timing. You guys tell me where the stop is. You want no stop? Fuck it, dude. Just push it over the weekend, man. Don't tell me what the trade is until Monday. There it is. I know some of you are going, wow, you bought something and it's already green? Wow, I've never seen that in my life. Well, that's because you guys buy at the wrong fucking time. You guys buy when it's fucking going down. You guys buy and then it starts to go down. You're like down 5%. You're like, fuck, man. Do I hold through here? Entry was at close yesterday. Oh, yeah. So Acta was thinking very critically about the 1 point in between there. Uh-huh. Okay. It makes a difference. Timing. Okay, but isn't there risk involved with holding overnight? What about that cost? What do you put the cost at to hold something, to buy something at close yesterday into today? I'd put it pretty fucking high. I'd put it over that premium. I'd put it over $11.20. Is there risk involved letting morons vote in trades? I think you're being passive aggressive and a little sad boy. Why don't you stop? I like this candle here. I do like it. It's so now that we're kind of coming out of the open a little bit, I do want to talk about like some of the idea of that data that I have in the channel, the value outperformance over growth thing. This is like an idea of momentum, right? So some of you are wondering as well, hasn't this been leading a little bit, right? Hasn't value been technically leading a little bit? And it has been trending up really the most and been the most consistent. But it wouldn't really be a leader in a dollar amount, right? There's still certainly like 10 times as much money in tech, right? I mean, I don't even know. It's probably more than that. It's probably more than that, right? And so, in terms of this continuing, is the question. So those charts basically say it's just a little over 50-50 that this continues to do better, right? This is performing better than tech, right? It's performing better than tech if you put money here and you sell money, you're doing a lot better than with tech, right? Easily, considerably better. I mean, it's not even close, right? Not even close. Now the question is, how much better do you do from here? My question really is, and the thing that I'm betting on, is that this actually gains momentum. It becomes the momentum trade. I talked about it a little yesterday. The momentum trade is that you go long something and short the rest. What did we do last year? We went long tech and shorted value. That was the reality. We went long tech, shorted value. And that's why value got fucked so much, stayed down for so long. What is the case right now? If all those yields increasing is because of reinflation ideas and the idea that we're actually running hot now, that the economy's coming back way quicker than we thought, whether it's because COVID's fucking getting just axed right now, vaccines are out of their mind, these kind of ideas that we're thinking that everything's coming back really quick. And so some of the fear is that, whoa, shit, we're spending $2 trillion now on stimulus. We're going to be overheating in the future, maybe 5 years from now. This, again, they're like fucking projecting far away, not right now. But so there's some ideas that we're going to be overheating, but isn't that good for the short-term value bet then for the next couple of years? Absolutely. And so the question is, do you get more inflow here than what we've already had? And does this turn into momentum? Do the normies on Wall Street bets start to look through to value? Do they start to look to value instead of their other picks? I would bet yes. Because if I'm a little zoomer, on Wall Street bets, yeah, I've got my things right now. But what are they going to look at in a month from now? They're going to be looking at that thing that's got that's getting some buys from institutions getting pushed up. They keep hearing inflation and that value's running. They're going to get headlines like that in the future. Then they're going to be buying here, causing momentum. What is the price here? Dictated by the options. The options dictate the price here. All you need is for fucking bets to be placed. Speculation. Yeah, I'm a part of this. You guys are now a part of the speculating. I've been a part of the speculating. You've been a part of the speculating. It's going to pick up, I would say, and it's going to cause this to get pushed. Now, it doesn't need to be immediate. Sure. Doesn't need to be right here. Didn't need to be right here. Doesn't need to be right here. The fact is, though, that it's still trending. Hasn't broken the idea yet. And there's moments in time to do that. The whole generational dip opportunity is just silly because generational dip opportunity was over here or over here, right? So, and you don't trade for that long anyway. You're in and out of trades, so it doesn't really count. Stop at 11. But it's going to be fun. It's going to be fun, and again, there's going to be someone's right, someone's wrong. Someone's right, someone's wrong. And just because we've been right so far doesn't mean we're going to be right going into the future. There's a lot of rights, but it doesn't mean that we're going to be right going into the future by betting on it, but I'm comfortable with putting my bets on what I've seen, what I've spent working on, and from what I know. And I think institutions feel this way too. They just, again, institutions can't do it as quickly as we can, as being, they believe in this idea as well, which is why they're still in bonds, but they can't go put that money into equities as quick as they can remove it from bonds. That's the reality. It's going to take them longer. We're going to be looking at level 2 data for the next month of them having a scheduled trade into value trades. Guarantee it. Healthcare is the easiest one to see, and I've been talking about healthcare, and I told you it's going to be my tier 2 in terms of what's going to do the best this year. Every single day I look at that level 2 and I just see scheduled orders every single day from institutions buying healthcare. If you don't understand that idea, you gotta do something to understand it, because again, that's those charts. I'm telling you, they're healthcare Healthcare is going to is going to do what's happening here, and there's really no way around it. There's nothing you can do in terms of flows that's going to stop it. There's almost no way to do it because the money continues to flow, and it's only a matter of time before the price starts to actually vindicate that idea and show that idea. And again, it's just like looking at energy and banks and seeing those charts, and I know some of you, I've talked to some of you, you feel kind of dumb with some of the things because you trade things that are going down when, again, this idea is not just an idea of today and tomorrow. This is an idea of much further into the future, which is why I tried to show these charts on a longer term schedule, right? I wanted to show you this on a longer schedule because that's the reality here, right? That's the reality here. Banks, it's so easy to get caught. You remember when we went long over here on banks, right? We went long over here. We took another big trade here. Again, these 100% trades on just a swing trade. This was a 100% trade just on a swing trade in 2 days. This is a long-term trade, which you're removing that risk of a short-term trade. And now you can it's not a guarantee, nothing's absolute, but when you make a long-term trade here, you don't have a risk of a downside because you're not going to lose points if it pulls back. You can get out of that position. That no-risk mentality is why institutions continue to grow because they make marginal trades. With billions of dollars, they don't need to make a 100% trade. They can make 5% on $1 billion, and they're pretty okay with it because they're making more than we are with. We could make 1,000,000% and not make that much. So, again, you got to keep those ideas in mind. But these ideas, again, with healthcare, and then using the bios as the short-term cover for those long positions like we've been doing. Again, these are strategies. These aren't just like made up fucking bouncing back and forth, making our own ideas up as it goes, right? It's a strategy. You got to have a plan, right? Some of you just go day to day, decide to do different things every day. It's okay, but you need to be trading accordingly then. You guys want... Okay. If you guys get stopped out immediately, then it's your own fault. 2. Stop. 11. Submit. Okay, it's in there. Let you know when you get stopped. I will let you know. Oh, you guys get stopped out. You guys get stopped out. I think I can see that you guys don't understand how stops work now. I think I understand now. I think I'm understanding a few new things. You guys let me know when you want to get back in that trade. Oh, God. All right, let's take a look. Let's see what the downward... So, again, we do have this, like, supply down here. And this is the biggest question in terms of tech down here. Is what exactly... I mean, there's supply in here. What exactly is, like, the mentality around a buy level? It's sort of like over this week here, this buy level in here that's sort of signified by some supply over here. When we were consolidating, this is, again... through Georgia runoff, big buying that came through, but it wasn't oriented on tech, right? It was oriented to the other side, which is why when you see all of this price movement in here, in relation, so much rotation in there, right? Comparatively. Look at the move afterwards. This comparatively to tech, right? That difference is a large difference, right? It'd be interesting. Hmm. All right, so we're watching. We're watching. Give me one sec.